Hello everyone, this is Paul from the Pin Academy, and in today's video we're going to be talking about what Forex is, the advantages of Forex over other markets, because we also have other markets. Then we shall also be talking about Forex trading hours, because there are different markets in different continents, right? So without wasting time, this is the very first video of the beginner series. If it's just your very first time to hear about Forex and you've come across this video, we do have a series of videos coming across. So by the time you finish watching all of them, you'll clearly understand what Forex is, and you'll be knowing exactly the type of trading we're going to be doing here, right? So what is Forex? Forex simply stands for foreign exchange, right? What do I mean by foreign exchange? Foreign exchange is, for example, if you're exchanging the currency of one country into into the currency of another country. Let me give an example. If let's say you have dollars and you want exchange into euros, this is an act of doing foreign exchange, which in simple terms is Forex. Now, most of us have been engaging in Forex knowingly or unknowingly. I'll give you an example. If you've ever traveled, you've engaged in Forex. That is direct engagement in Forex. But if you've never traveled, but you've maybe ordered for something online from a different country that is not in your country, let's say you used Amazon to order for a gadget, let's say an iPhone or an electronic, let's say, and let's say you live in Uganda, you have the UGX, right? You will need to convert this UGX into, let's say, USD to purchase that product. Altogether, the gadget or product may have, let's say it's 1,500 USD, and you will need to change your UGX into the 1,500 USD. There will be an amount X, right? The person you're changing, the place you go to change, they'll be having something like this. They'll be having the buying price, and they'll be having the selling price, especially the Forex bureaus, right? Or even if it's not a Forex bureau, but where you're buying from, they'll tell you that the Ugandan shillings you do have, one Ugandan shilling is equivalent to this, or one US dollar is equivalent to this. That amount, X or Y, is what we call the exchange rate, because you're changing UGX into the dollars. That is what we call foreign exchange or Forex. You're changing one country's currency into another, right? So I'll give you a layman's example. When you go to a Forex bureau, you'll find a certain price here, let's say X and Y. Let's just understand this if you've not been to a bureau. Let's say you live in Uganda and you have Ugandan shillings. Now, if you have Ugandan shillings, you'll find that there's USD here, or there's euro. Let's say this is a Forex exchange bureau in Uganda. This is how it will appear. There will be a price here and price here. So when you have Ugandan shillings and let's say you want to travel to the US, or you want to purchase something, or you want to send someone dollars abroad, what are you going to do? You're going to go to a Forex bureau or to a bank, and then there will be prices of the buy and sell. It means that the type of Forex we do involves buying and selling, right? The layman's example I gave you of traveling and buying something abroad is the same principle here. Now, when I have my UGX and I want dollars, the Forex bureau is going to sell to me, meaning they're going to use this price on the selling side, right? They're going to sell to me the dollars because I want dollars. They're selling to me dollars, right? Then what if I have dollars and maybe I came from abroad, I came from America and I'm back into Uganda? What price are they going to use for me? They're going to use for me the buying price, because they're buying my dollars. They're buying the dollars from me. So this is the pricing that they put. So these prices they'll be using will be the exchange rate for that transaction. The same will apply for euros, in case they've put euros. The same will apply for GBP and all that. Now, in the markets that we're doing, because we're doing electronic trading, where you don't have to exchange the physical money, maybe UGX to dollars or euro to USD, the physical money. What are we going to be doing? We're going to be buying when we expect a certain pair to gain in value, and we shall be selling when we expect a pair to drop in value. Why am I mentioning pair? Because we do trade for foreign exchange to occur, you need two currencies. Like we said, it's an act of exchanging a currency of one country to another country's currency. So you will need to have what we call a pair. Let's say UGX USD or Euro USD. Are we together? So we trade it in pairs, and we click buy because we're doing it electronically, and we're just using capital. We don't need to have the physical money, or we don't need to go to a Forex bureau. So you just need to have capital, and then you'll click buy, using your gadget, as long as you're connected to internet and you've been linked into the market by what we call a broker. We shall be speaking about that in upcoming videos. So you click buy when you expect the value or the exchange rate of this Euro USD to go up, and you'll click sell. You'll be selling this pair when you expect the exchange rate of this pair to go down. Are we together? So that's simply what Forex is in detail. And then this Forex market is so big, and it's one of the biggest markets, if not the biggest in the whole world. Why? Because it has about $6.6 trillion circulating every day in the market. So meaning that's a very big market, right? So that's what Forex is in detail. Now let's just speak about other things that we can summarize about. One, we said we trade Forex in pairs, and then we said we buy when we anticipate the exchange rate to rise, and then we sell when we expect the exchange rate to drop down. So what are the advantages of this Forex market over the other markets? Remember, this is Forex, we're dealing in currencies, but also we have other markets like the stock market, the cryptocurrency markets. I'm sure most of you now are hearing about Bitcoin and the rest. Those are cryptocurrencies. We have options, we have the commodities market, and very many others. Now, what are the advantages of the Forex market? First and foremost, you need less money to start it with, less capital, because we're trading, these exchange rates are not so big, right? And also, there's a lot of liquidity in this market. Like I've just told you, there's approximately $6.6 trillion circulating every day in the market. And then also it's open 24/5 the whole week. We trade it 5 days a week. That's Monday to Friday. The weekends, the Forex market is closed, and then it runs 24 hours. I'm going to just show you in a few seconds why it runs 24 hours. Then you can trade it any time of the day. Just like we've mentioned, it's 24 hours. And then also you can trade it from anywhere, right? As long as you have a gadget that can enable you access internet, right? So why do we say that you can trade it anytime and any time of the day and it's 24/7? Because we said when we're starting that we do have different markets in different continents. For example, in the US, we do have the New York Stock Exchange market, which opens at 3 p.m. and closes at 11 p.m. This is in GMT +3. Then we have the London Stock Exchange market in Europe, which opens, the European markets do open at 10 a.m. These are the European markets. I just used cities, but simply I'm meaning New York, the American markets, London, the European markets, Tokyo, the Asian markets, and then this one, the Australasia, right? So London, 10 a.m. to 6 p.m. This is GMT +3. Tokyo, it's 2 a.m. to 10 a.m. GMT +3. Sydney, it's 1 a.m. to 9 a.m. GMT +3. So you can just convert this depending on the country in which you do live, and you'll be seeing the different times the markets do open. So if you have to see these different times from 3 p.m. to 11 p.m., and then 11 a.m. to 6 p.m., 2 a.m. to 10 a.m., you can clearly see that it's actually literally operating 24 hours in a day. At least at a particular time, there's a certain market that is open. Why is it open at any particular time? Because the Forex market never closes. Why? Companies are doing transactions. There's a company maybe in a certain continent that wants to buy products from a different country, so they'll need to do exchange. There is maybe an expatriate who wants to travel from where he or she is working to go back to his or her home country. We'll need to exchange. Those are the transactions that are happening, and they're happening any time of the day due to the differences in time. So that's what Forex is in detail. Hope you did understand. So if you're new, do not forget to click the subscribe button and turn on the notification, because there are a lot of series of videos coming up that can help you to understand exactly what this industry is all about, so that also you can engage yourself into trading, right? So that is it for this video. Let's wait for the next one. Have a great time.